Good evening everyone and welcome to today's webinar. Together Chris and I will show you trading methods based on oscillators. So this is our webinar that is dedicated to trading systems. As you know guys, we do live trading Monday, Tuesday, Wednesday, both Chris and I. So on Thursdays we provide you with different trading systems. And today we will show you some nice methods, Fisher, awesome oscillator, range span index, array system, and this tool you can add to your arsenal. So arsenal of tools should always help you to find good entries in the market and to actually fight with different market conditions. Before we begin, as always, standard is disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. So if you want to get a corresponding information on charting conditions and any other detail, you should visit Iron Markets Global, select your country of residence, and contact an appropriate entity. Have in mind that this video is not part of the .co.uk website but the globalnews.com website. So today's agenda from my part is first we will start with what are Forex oscillators, then I will mention other oscillators, then of course we will go through indicators that are supposed to be used in the system, such as PSAR, REI, and finally REI system, but in short I call it array system. Okay, so what are oscillators? Oscillators are simply synchronous or anticipatory indicators. It means that oscillators want to and try to anticipate different moves in market. Contrary to many opinions, oscillators are actually leading indicators, so they tend to move with price. Of course, price is the ultimate indicator, and all indicators are lagging a bit. But if you combine different indicators such as leading, lagging indicator, and a static pivot or dynamic pivot point, you can find or you can try to trade a simple system that should be useful and provide you pips. As you know guys, I'm a price action trader, and these concepts are of course mostly for traders who want to expand their knowledge or for new traders who are entering in the market. Okay, so about oscillators, we can say that they show us the moments of trend exhaustion and refine possible turning points. So as with all oscillators, you will probably see some levels such as 60, 80, 30, 50, and usually when price is close to a certain level and it's making a U-turn, we say it's a buy or a sell signal. Well, sometimes we use oscillators as buy or sell signals, but well, often we can also use oscillators to give us some range where price should be or should not be traded. The main purpose is to actually see if the price is in the region of overbought or oversold zone, so we might actually buy. Remember guys, even though if you use systems, the primary principle of trend trading is to buy, support, sell, resistance. For new traders who are not accustomed and who have not dealt with price action, finding overbought and oversold zones is usually done by different indicators. Okay, now also new traders simply cannot find the trend. They don't understand the trend concept. Well, the trend is always, as you know, as we already talked about, it's series of higher highs and higher lows. Of course, higher highs, and lower lows for uptrend, higher highs and higher lows, and for downtrend, it's lower highs and lower lows. In order to show new traders what trend is and how to define the trend, Chris and I have included our elite currency dot indicator, so new traders can also use our elite currency dot to show and to find trend. Okay, so that is what I will be showing also today. Also, now let's get back to oscillators. Oscillators usually, as I said, they find trend exhaustion and they find possible turning points. But as I said, it's not just to discover overbought and oversold, but to foresee breaking point in a price movement. They tend to generate false signals also, usually in strong trends. That is why I say if you want to trade a system, you should always start with trend following. And this system, Ray system, is a trend following system. And to easily find trend, we have included a lead currency dot indicator. Oscillators also provide signals about trend changes and trend strength, and some of the most popular indicators for spotting turning points, exhaustion points, overbought and oversold conditions, entries in the market are stochastic, RSI, CCI, and MACD. Stochastic, RSI, CCI, leading indicators, MACD is a lagging indicator. But when we combine different indicators, we should have some simple method that should provide some signals on daily basis. Now, other oscillators that we also use from time to time and that can be found in different systems are parabolic SAR or PSAR, rate of change or ROC, elder rays, dim marker or dim, range expansion index or RAI, and ultimate oscillator. We will not go through all of these different oscillators, but of course we will mention what are the most important for traders, especially traders who would like to trade our RAI system. So first we will start with PSAR. PSAR was developed by Wells Wilder in 1978, and definitely I can say that it has withstood a test of time. Although I don't use PSAR with price action, of course, because price action trading is a different dimension, I can say that PSAR is very often used in different Forex systems. You will find PSAR usually in basic or basic to advanced methods, simply because it's very easy to show, it's very easy to use, and it's very likable indicator from traders who actually start to trade. Because I know that there have been some good systems on Forex Factory, such as Ash Forex version 2 system, that also uses PSAR indicator in their 4-hour trading system. Now, PSAR follows price and can be considered a trend following indicator. So once a downtrend reverses and starts up, SAR follows prices like a trailing stop. So usually traders use a PSAR index to actually find entry point and then trail the stop as price moves in profit. Also, PSAR can also serve as a stop loss indicator. Now, the stop continuously rises as long as the uptrend remains in place. In other words, SAR never decreases in an uptrend and continuously protects profits as price advance. Okay? It's also very important to know. So SAR never decreases in an uptrend and continuously protects profits as price advance. The indicator acts also as a guard against the propensity to lower a stop loss. But once price stops rising and reverses below SAR, a downtrend starts and SAR is above the price. This means when PSAR reverses the place from downtrend to uptrend or from uptrend to downtrend, we will usually see its switch of position. So usually the trend changes and we are not in downtrend or uptrend, but actually the trend changes. In this system, the main thing how to gauge the trend is actually finding in uptrend higher highs and higher lows, in downtrend lower highs and lower lows. That is very important because that is how we will define trend with PSAR, with array system, and you will use a lead currency dot indicator to easily define a trend. Now, once price stops and reverses, a downtrend starts and SAR is above the price. Also, it follows price lower like a trailing stop. In downtrend, the stop continuously falls as long as the downtrend extends. But because SAR never rises in a downtrend, it continuously protects profits on short positions. So usually, guys, this applies to higher time frame trading because protection on lower time frames is usually used by moving profit stops above support resistance, usually hourly pivot points. Okay, but for new traders, it might be something new, so I would advise new traders who are watching this webinar to actually stick to the rules that I will explain with this system. This is how it looks when applied to our MT4 platform. It's pretty much very simple. You will see dots. You can change color of dots. I advise you to leave the default setting as 0.02 to 0.2 as it shows by default. PSAR, of course, is available on our MT4 with other markets, and you can safely apply to your chart. Just draw it from the indicator list to the main chart, or use the template that I will provide to traders who actually send me an email. It's a free system, so I can provide you with indicators and templates used for this system. Now, the main motor of this method is REI, or Range Expansion Index, REI. Now, it is a relative oscillator indicator that measures the pace of the price changes and signals overbought and oversold conditions if the price demonstrates weakness or strength. Originally, it was developed by Tom DeMark, and Tom DeMark actually explained this indicator in his book, The New Science of Technical Analysis. Now, usually traders know Tom DeMark from his trend line trading. He usually teaches traders how to trade with a trend, and usually traders who want to expand their knowledge in trend trading concept and trend line trading concept, they use Tom DeMark teaching about that usually goes with 3 trend line touches. Well, this indicator is a price following indicator, and it's a leading indicator, and it's a simple oscillator, but it's actually suitable to trade as overbought and oversold conditions, or actually the conditions where you will see the price U-turn. I will also explain this later. So REI, or REI, is an enhanced oscillator because it tries to remain calm during the range trading and indicates signals only when significant peaks or bottoms are spotted. That calculation is incorporated into the indicator itself, so it's not similar to stochastic. It might actually resemble a stochastic because all oscillators are more or less the same, but the thing is, it's different from stochastic, and you should not confuse it with other indicators. Default period is 8. We will also use 8, and by default, when the price goes above level 60 and declines below it, bearish signal is given. When the price goes below minus 60 and then rises above it, the bullish signal is given. In this system, we modified default values, so we will not use 60 and minus 60, but rather we will use 30 and minus 30. That is what we will use with our REI system. Now also, you can find REI. This is how it looks by default on MT4. Usually REI, some traders might say this is simply we are familiar with this indicator, but have in mind that a lot of custom indicators have been based on well-known oscillators, so don't be confused if you see that something similar happens on a custom indicator. Probably the code from this indicator is taken and incorporated into some of these custom indicators. Now I will show you the system itself, and we will go through indicators fast, and of course I will show you how it looks. Of course, here we'll go step by step, so also this would be easy for new traders. This is, guys, the system itself. as you can see, we will use also one more indicator here. So we use PSAR, Elite Currency Dots, Damiani Volatility Meter, and REI indicator. For ease to use, we can actually put grid like this. And of course, guys, as always, I advise you to use indicators for pivot points. For all traders who would like to trade the system on intraday time frames, you can use, of course, for ease of use, Admiral Markets pivot points. Here, guys, you just need to drag and drop it. Okay, you should download Admiral Market Supreme Edition, and of course, you will see this here. But you can also expand these pivot points to show actually higher time frames such as weekly and daily. This system is traded on 1 hour and 4 hour time frames. Okay, so you should be able to see it like this. Okay, now one of the things that I want to say is you can change colors here. Okay, it's very important for you to know that you can change colors. It's not fixed. I will provide you with a template, but of course you will be able to change colors as you see it fit. Now the main thing, guys, here with this system is you need to understand the indicators first. Okay, you need to understand these indicators. The primary thing here, guys, is when the candle is bullish, it means the prices go up. When the candle is bearish, it means the prices go down. Now here, especially for new traders, this is very important, guys. These dots are elite currency dots. So we use these dots to actually pinpoint higher highs, higher lows, or lower highs, lower lows in trend condition. For ease to use, traders should watch the trend from that is spotted by using elite currency dots. So what is a downtrend? Downtrend is a high and low, and then another lower high, another lower low. Conversely, uptrend is low, high, then another higher low, and higher high. So that is uptrend. The indicator marks swing points in the market, and actually it tells you whether the trend is up or down. These are dots, so you should see dots. You see dots. It's like, this looks like some form of rhomboid shape. So here you can see it here. These are dots, and these little tiny dots are actually PSAR. So you see red, blue, red, blue. So let's use, for example, pound dollar. In pound dollar, you can see that currently downtrend is in place because you have lower highs and lower lows. You can also connect these dots, so you will see how the price is respecting it. Okay? You should be able, guys, to see pound dollar. Just confirm if you see pound dollar chart and dots, because Mario is saying he sees dollar yen. I'm showing actually pound dollar screen, so you should be able to see pound dollar, not dollar yen. Let's see, maybe you should here, let's use this one. Do you see it now? I'm not sure. You should definitely see pound dollar. Yeah, pound dollar. Okay, just send me a note, and yeah, I probably share the other monitor, so no problems with this. So here again, I will repeat. Bearish candle is red, bullish candle is green. Elite currency dots are these big dots, red and blue. These small dots are PSAR. Here you see Damiani volatility meter and ray indicator to the bottom. Now here, when you connect these dots, you can easily spot trend. In uptrend, you usually connect these dots to the downside, okay, that show support and swing points to downside. In uptrend, you connect dots that are supposed to show you downtrend, as I show here in this example. Okay, obviously now we have a downtrend on pound dollar, so actually we are supposed to sell. Now, how do we sell? Let's use the basic example when the price was here, okay? Because in now moment we don't have any signal. But here, guys, here we actually had a sell signal. So the price already was established here. We have high, we have again a low, then we have a lower high. Actually, we have two lower highs here. So we can say that at this point here, we have a downtrend, okay? We have a downtrend. High, low, another lower high, then another lower high. Obviously, guys, two lower highs, lower lows. Even for novice traders, this should be pretty much easy to spot. Here you see we actually see a nice downtrend or the start of downtrend. Now, the big thing, guys, here on Damiani volatility meter, when red is above, here when red is above blue, it says trade and don't trade. This is just for novice traders. It's not for traders who actually have some knowledge. So traders who have some knowledge can exclude this indicator simply because they tend to overtrade. You don't do it. So this is from keeping novice traders from over trading. Usually when red is above blue, then you can trade. When vice versa, when gray is above red, it says we don't trade. Let's see if we can find an example where it says don't trade. Here you see it says don't trade, okay, because gray is above green. But as I say, for you as maybe experienced trader, it should not bother you. Now, how do we trade? Here we have downtrend. Now the big thing is to spot retracement. When PSAR show below the price in downtrend, it means that the price is retracing. Now when first dot appears above the candle, okay, and when or if the REI indicator is or was above 30 and crossed below 30, this is an entry. So here, guys, you can see at the close of this candle, you had a short entry on pound dollar. So here you see dots were above all these candles. Then the first dot below this candle actually shows that retracement is in place. Here our trend has been confirmed, our entry has been confirmed. You see it was above 30, then it dropped below 30. So the main thing is for REI to be above 30, or it needs to cross 30 from above. If it's very low, let's say way below minus 30, you can also add default values. You don't trade. We can add, and you can also add here default values, so you don't actually trade. It needs to be above 30 and crossing above, okay, crossing below from above to actually place a trade. Let's use, for example, dollar yen. Okay, very strong downtrend. Okay, where did it start? Okay, here you see high, low, lower high, another lower high. So we might actually say that the downtrend actually started here. Okay, it was confirmed with this dot. Where was our short entry? We actually wait for short entry because now the price is retracing. We need to wait for short entry. Let's use maybe uptrend example here. Yes, here we had uptrend, low, high, then low, 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 another. You see, you connect these points. Okay, obviously the price was in uptrend here. Okay, obviously uptrend, and our entry was here actually. Yeah, the price was below minus 30. Okay, and it just crossed minus 30 from below. PSAR dot appeared. This was retracement. This was the close of the candle. These dots never repaint. You should also know that. and here, okay, this was a long entry. Have in mind, guys, that this is clearly trend following system, and simply it will not work in range bound markets, or you do not take counter trend trades ever with this system. Okay, it's purely trend following system. So you need to know that when you spot a good trend, okay, then you should be able to make pips on that. Also, for example, where you place stops, and it's very simple, stops and targets. Your target is either next resistance or next two resistance points. Usually you put your final target if you get a surge momentum, if you are in downtrend, at S3. If you are in uptrend, you put it at R3, and you follow dots. So in this example, you would have entered here, okay, and you would just go long until this trailing PSAR stops you out. So you would make like 35 possible pips. Or if you see that there is a strong resistance, you can take your full profits at resistance. The purpose of PSAR is to provide you with trend and to trail you with a profit stop. Okay. Similar, guys, go with downtrend. We can find, let's see if we had down. And yes, one more thing. You never ever short, no matter if you have a signal or not, although you don't have a signal here, but you never short at S2. The best shorts are found at resistance, pivot point resistance 2, resistance 3, resistance 1. That is where you aim to make a short trade. Always, guys. Don't forget it. Also, one more advanced entry, how you can actually try to make an advanced entry. Let me see if I can find some pair that you can make some. This is for traders who want to get a little bit deeper into the system. I will show it now. Okay, here. This is obviously uptrend, guys. Obviously uptrend. Here you connect dots. You see low, high. This is higher low, higher high, another higher high, another higher low, then another high, another higher low. So clearly, guys, this is uptrend. Here, for example, you missed this trade, so you didn't enter the trade because let's say the dot didn't appear. So what you can actually use, you can use elite currency dots to enter a trade. So if you see this as retracement, because obviously dots are above price, so you need dot below price. If you miss PSAR, but you see that RA indicator is performing as we said, it's touching 30 or it's just below 30, you can actually enter here. When this blue dot appears, you can immediately enter the market. You can actually test this to see how it works, but this should be an advanced technique for entering markets. And have in mind, guys, if you are new traders who are watching the video, don't trade if gray line is above red line. For all experienced traders and traders who are accustomed to trading forex systems, you can safely delete this indicator window. If you have any questions, guys, you can ask me. If not, of course, I will pass over the screen to Chris. If you want to have a Ray system, feel free to email me. It's free for you, and at least you can use elite currency dots if you don't want to trade a system. If you want to trade a system, just mail me over and I will send you the indicators. This indicator Ray, I have it, so feel free to email me. Okay, I will send it over to you. Thank you, guys. Now I will pass over to Chris. As always, guys, I will be here with you. Don't forget to sign up for Wednesday Live Trading tomorrow. See you soon. Cheers.
Great stuff. Thank you so much, Nenad. Very interesting indicators there. I wanted to talk about a few indicators as well, oscillators in today's session. So let me first share the screen here. If I need the control first, let's see. There we go. Alrighty, so that's the Admiral Markets platform, MetaTrader 4 Supreme Edition. And basically wanted to first talk just quickly about the oscillator, but not too long before diving into some other oscillator combinations. I've talked about the awesome oscillator already before many times, so I don't want to be repetitive or to dive into this too long, because for those that have been in this webinar or similar videos before, know that I use the awesome oscillator and know exactly how I use it, so I'll keep it short. But the awesome oscillator, very similar to the MACD in many ways. I have a bit of a preference for this one because of the Elliott wave theory that I use the awesome oscillator for as well. But besides the waves and making the count of the waves easier and simpler to see, there's also an added benefit with the awesome oscillator in the sense that it shows momentum, blue obviously showing up, red showing down, and of course the zero line, which is kind of the midline, the halfway line, whether price is accelerating even further, up or down. Okay, so obviously blue above the zero line would be even more bullish trend, red below the zero line, below that middle line would be even more bearish trend. The other way of using, one of the ways I like of using it, it's a quick way of seeing whether a swing high, swing low has been completed. And that has nothing to do with the zero line, but actually the switch from blue to red, but not the immediate switch, but the third bar, the close of the third bar indicates basically that the previous swing is completed and a new direction might occur. And it basically is a reversal signal from that point of view for this time frame. Let me make the awesome oscillator a bit bigger. And you can see, for instance, here, this is the third bar. So we have blue bars rising and going each bar higher, actually higher highs. Then we have one red bar, a second red bar, a third red bar. After this third bar closes right here, that is basically when this particular swing high to the upside has been finished, this one, and a potential new direction could occur. Now this is just a potential. I do use other things to kind of confirm whether a new direction will occur, a new trend will occur besides this awesome oscillator. But it's a useful extra tool to at times use when a new trend, when a new reversal is expected. At this point, you see price indeed stalling and boom, continuing from the pivot point, breaking below the pivot point down right to the S1. So pivot points could help estimate where the breakouts occur, where the targets are. To the upside, we have an example as well right here, just a bit before that, when the pound dollar turned from down to up, excuse me. Here, the third blue bar, once again on this bar, you can see making the upside. So the entry in theory could be right at that close of the third bar. The stop loss below the top or bottoms or the fractals, and targets could be anything regarding fib targets, bands, pivot points as I just showed, and any other tools that you might find comfortable or feel comfortable with. Okay, so it also is quite in line with my time pattern, 5 to 6 candles, not breaking a low. Take a look at this here, right here. 1, 2, 3, 4, 5, 6, 7th candle. This one is a bit earlier here with the downside 1, 2, 3, 4, 5, 6 candle, 7. The awesome oscillators typically just a bit earlier than my time, but they are quite roughly similar to each other. All right. Now, don't get me wrong, these are not always turn and reversals. That's why it is good to estimate whether a reversal will indeed happen at that spot, because sometimes the push lower can be extended. For instance, here, when the pound dollar was falling, all right, we had 1, 2, 3, 4 times a turn with the awesome oscillator. All right, the fourth finally got the bigger retracement. The other 3, let's take a look. 1 was just a light retracement. The second was a light retracement, and the third was a consolidation box. So if price goes sideways or it's not at a key confluence, you got to be careful with hunting for reversals. It's just one piece of the puzzle, not the only piece of the puzzle. So here, let's take a look at this. For instance, third candle here, you can see we got a retracement, but a bit later. Here, the third, we got a big reversal. From this point of view, this was a massive reversal, right? But it's not always like that. So you got to time it precisely. You got to be on guard. Here, the third one, yes, we got a bigger correction. Here, the third one, 1, 2, this is the third. Yes, we got a pretty decent trend continuation. So it's a handy tool. It's a good thing to keep an eye on, but it's not the only thing. Also, you can use it the other way around. Of course, let's say that price is falling here, right? And we have a good breakout candle. So how do we know that the trend is still alive? Well, if these bars are red, right, here, 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 that is extra confirmation that on this time frame, price is really trending. So I could zoom into lower time frames, knowing that the 4-hour chart is showing a red bar in a downtrend below the zero line. That's extra confirmation of this downtrend. That's another way of using it. Okay, so that's quickly on the Awesome Oscillator. Now let me go to a different template, different profile, in fact, and let's take a look at the oscillators that I want to show you now. Just give me a second. One of the best oscillators that I find is called the Fisher Transform. It is one of my favorite oscillators, and I will show you also the Sigma Momentum and especially in-house developed oscillator as well. But first I need the profile to change. There it is. Good. So this Fisher is really great because it really is very responsive to price. In this case, you're looking at Heikin-Ashi candles, and it is very, very powerful in the sense that if this is blue or red, there's a good chance that you're looking at a very strong trend. Here you can see Heikin-Ashi candles are green. They're above the moving averages. So if the Fisher is blue like this, it's a beautiful combination to ride the momentum. You can really, really get good info by looking at that Fisher. Just by understanding if it's dark blue or dark red, that will give you a lot of information regarding if, for instance, you're using a trill or if you're using it for a trend. If you're using a trill, you can keep using the trill. You don't have to exit that trade because the time and the trend is on your side. If it loses its dark blue or dark redness, that could be a good way to actually trail manage or trade manage that trade, for instance. The other thing is also possible as a signal. So, for instance, here, as it goes from light blue to dark blue, right here, I'll show you. Excuse me. Right here. That could be a signal as well. And what I often do is use the Awesome Oscillator or the Sigma. What I do is basically look for a retracement within an uptrend. So Sigma is the long-term uptrend or downtrend, and the Fisher is a short-term retracement. So for instance, here, you see blue, 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 everywhere blue. So when this reaches the red, these are short-term retracements. So as long as this stays blue, it's an uptrend. What I'm looking for here is a retracement. So I want it to go below the zero line, get into the red territory, but then lose its dark redness or redness and go to a thin red, what happens here. And I often use that as a signal to go long, as you can see, a great follow-through after that. Here too, right here, good follow-through after that. All within this uptrend, you can see that. Now there, of course, it's not perfect. Here you can see right here that here we had a turn, uptrend and a turn, but it didn't go anywhere and then slammed down. These things happen at the end of the trend. This is basically a wave B for those that like waves. You know the standard pattern, even if you're not a wave analyst. 5 waves up or down, of course, for a trend, and a 3-wave correction. Where do most traders get caught? Right in here. Trend still seems up, but actually the divergence between the tops here indicating that the trend is weakening and that this is weakness and a bigger correction. That's where trending systems have the most problems. Here too, so if you know wave analysis and you know how to read it, you could be able to avoid these types of weaker setups, basically. All right, that's a good filter. the wave analysis for such trending situations. So yeah, that's basically, let's take a look at the 4-hour chart here, or yeah, there we go. Good. So for instance, here we had a dip below red and a turn. So it's very neat because it says trend. This is pullback. And then the continuation, all within the oscillators. Trend, pullback, continuations, or BBC, break, pullback, continuation, all of it within 2 oscillators. So that's perfect. So 4-hour chart entry would be here, right there, and get a good continuation. Another one was right here. You get a little bit of continuation. And there was one more in this example right here. And a little bit of a continuation as well, but it didn't go too far, as you can see. Here is a switch from up to down, from down to up. So that's where the downtrend is lost and the uptrend is valid. The last oscillator is just a simple moving average oscillator, but I like it. It shows the difference between 21 and 34 and between 8 and 144. The bars are the difference between 21 and 34. The line is the difference between 8 and 144. So the angle of the 8 is great for momentum, but if it's above or below the 0 line, there's an extra kind of boost to the up or downtrend. If it's above and green, it's a great uptrend. So this piece, green bars and green angle, great uptrend there. This piece, great downtrend, as you can see here too. But this is already getting into retracement territory here too. So instead of having all the moving averages on the screen, this is a useful thing too that kind of saves me time. So these are the oscillators that I like to use the most and prefer basically above all the ones I like the most. I like the parabolic one that Nenad just showed as well. It's good for breakouts, and it's a simple way of seeing when basically the trend is continuing and you got a breakout after consolidation. So great stuff too. I like that a lot. Very good one as well. And yeah, that's something I appreciate too. But regarding oscillators, I think that these are the ones I are the best for me. So is it something that I kind of trade blindly? Sometimes yes, but most of the time I am a structure trader, which means I do look at various things. Last few weeks we've been talking about support and resistance. That's a great step to look at. One could look at trend lines for patterns, moving averages for support and resistance, and trend, and the oscillators, for instance, for entries, right? There's a lot of different combinations. It's very important as a trader to find the one that suits your psychology and your kind of view of the market. Everyone has their own view of the market. And you can learn from Nenad and myself. You can learn from anyone you like. But ultimately, you will grab the bits and pieces that fit with you. And that's indeed the best way to do it. Because this is just natural process to kind of mold the way of trading that suits you and that you find pleasant and that you can tolerate as well. If we could, of course, explain this and that, and if it's possible to actually follow the rules very strictly with certain systems, and you'll be successful with that. In that case, that system just matches your view of the market, and that's great. In some cases, you find yourself breaking those rules too often. That could be perhaps a lack of discipline. You got to look yourself in the mirror and see what the reason is. But it could also be just because you don't think it's pleasant trading. It could also be that it doesn't fit your style. So you want to find that balance. You don't want to give up too soon on the system, but you also want to find something that you feel comfortable with and that's suitable with how you look at the market. So that's a balance. Often, it's true, traders often go from system to system too soon. And that doesn't solve anything either. You do have to kind of diligently work persistently on something that matches you. and avoid looking for kind of the holy grail. The difference between looking for the holy grail and finding something, the perfect system, and the difference between a perfect system and something that matches you is that you're not just only going from one system to another. You take the bits and pieces that you find interesting from webinars and systems and things you've seen and slowly build something yourself. So it depends. Some traders might be perfectly satisfied with one way of trading because it matches what they see. Others, that process could be longer. With regard to, for me, I appreciate these two. It's very simple for me to see it. It's very easy to recognize. It gives me extra confidence for trend, for entries. So when I've done my homework on the higher time frames, or not even higher, but just done my homework regarding support and resistance and patterns, then I can easily spot the trend with this chart, this template, and I can see very quickly where there's break, continuation, and pullback. I know where there's a decision zone. So for instance, if there would be a key decision zone right here, I wouldn't take that trade, right? But if there's a decision zone right here, I know there's enough space for price to be in a trend, make the pullback and make the turnaround and make the continuation right here. And if my analysis showed that the support level, key support level is all the way down there, that means there's 120 pips space that I know that there's a good trade there, right? Especially if price were to have broken, for instance, through a support level like this. Broke through support, perfect, right? There's a hook back, continuation. So these oscillators are great, but I do use them within the larger context of identifying patterns in support or resistance. Patterns like chart patterns, wave patterns, time patterns, and support or resistance like fractals, tops and bottoms, fib levels. In such a case, if price broke through support, hooked back to it, I would expect there would be plenty of space down to the next support. In the other scenario, if the key support level was here, I would probably not trade that, right? I would not go for this particular one, probably because this is only the second attempt to break that support, and it's questionable. It could sometimes I might think about it. It depends on how strong the support level is doing. How strong is the support level? How much confluence? How big of a decision zone is that? There's tons of confluence. There's tons. Is a massive decision zone. I would probably not think about it. I would certainly not go short right here as it is approaching that level for the very first time. So now you can see, two different scenarios, oscillators behaving exactly the same way, but two different structures regarding, the market structure, two different scenarios of how support and resistance is looking like. So my question for you is, what is your favorite oscillator? Do you have one of these as well in your favorite list? By any chance? There are tons of oscillators, of course. CCI is a very popular one. Commodity Channel Index, MACD is a very popular one. RSI, Relative Strength Index, is a very popular one. Williams has more of those as well, of those oscillators. But these are my favorite ones. I think it's, it matches my psychology. I just think it's easy to read. If I see a pattern, obviously, then I'm skipping these kind of situations when there's a chart pattern, price is going sideways like this. Obviously, in that case, I don't look at those oscillators anymore because there's a sideways zone, and I'll be looking for the support or resistance for price to bounce at those support or resistances. This is a trending, when the price is trending, so I need to have a trend. If there's a consolidation zone like this here, in this box, between these red lines and and orange lines, then it's much better to look at price action, see if there are any potential bounce trades at those levels, at the tops and bottoms. Range traders could have a feast in this zone, potentially. if done properly. Trending traders will get chopped to bits here. So you gotta need to know the environment, trend, range, reversal. You gotta know, in my view, what the patterns are saying, and then you gotta know basically the momentum and correction. All right, so support and resistance, patterns, trend and momentum. Those three things are key. With those three things in hand, you can dissect the market like a pro, and you can analyze it very accurately. Brian likes the stochastics. That's another one I didn't mention actually, but yep, very true. Stochastic is also very popular indeed. And Brian is so nice to mention 1555 EMA. So let's take a look at one more example. For instance, at a different pair maybe, right? Something different. Let's take a look at the 4-hour chart. It's good for intraday, intra-week, and swing trading, in my opinion. So let's take a look here. For instance, recently this upside. Let's keep it simple right here. So we have an uptrend Y. Sorry, here we go. Here, red from blue, so that's where we have the long-term uptrend. I use the momentum for that uptrend. Let me make that a bit bigger. So here's the uptrend. The Fisher also rising, retracing, going back, going to the red territory. This is the pullback, so I got an uptrend here. Once again, uptrend. This is the retracement. And this is the continuation. When it loses its color here, look at that. And basically that's where you get, when the candle closes, excuse me, right here. On this one, that's the entry. Stop loss, I use fractals, fibs for stop loss placement. I also go a few pips below that, not just right below it. And then the target, I could use different methods, but one of those could be putting a fib on the last swing high, swing low, and aiming for the minus 272 target. Result could be that, in this case, approximately 140 swing trade, about maybe 36 risk for 4-to-1 reward to risk ratio trade there. All right, another example right here and right here. Of course, multiple entries in the same zone is typically not advisable. Better skip those unless you've already used lower risk and you want to increase it to something of a normal risk, and you've used scale-ins, that's something else. But otherwise, it's good to avoid multiple entries in the same zone. Any questions by any chance for this? This is basically what I wanted to show you. For more webinars, of course, you can check out Admiral Markets. For a lot of these things like the Admiral Keltner, Admiral Pivot Points, you can download that by going to Platforms and go to MetaTrader 4 Supreme Edition. For more webinars, please go to Education and Webinars. Next week, we have a new lineup, of course, available for you. And Analytics Daily, you can check it out right there. So those are just a few things that could be worth your attention. I don't see any questions. If you do, of course, there's a live webinar available. Let's see, tomorrow actually already. So because today's Tuesday, so tomorrow still 2 webinars actually. Nenad's session, live session here, and my strategy webinar. So please feel free to use that as well for any follow-up questions. And I wish you great trading, folks. Have a good rest of the trading week. Maybe see you tomorrow, hopefully still. And cheers.